So the stock market took an absolute dump this morning after the jobs report came out. You guys can see SPY went from about $407 all the way down to $400. That was a drop of about 1.6%. And Triple Q in the same time period, it went down. Let's take a look here from about $293. And mind you guys, Triple Q tracks the NASDAQ, SPY tracks the S&P 500. Triple Q went down about 2.5% when the jobs data came out. So we're going to break down why this is going on in this video. We're going to talk about some stocks, and we're going to go over kind of my thoughts on the Fed, charts here that I'm looking at. So sit back, relax, take a sip of your coffee, and let's just dive into the video, guys. And if you find value, all I ask is for you to hit that like button, subscribe, and maybe share this video with a friend. So yeah, markets did tank initially, but now since that point, you all can see they have rebounded and they've pretty much closed that gap. They've recovered all of the losses for the most part. Triple Q hit 286 at about 8:40 a.m. on the East Coast, just 10 minutes after the numbers came out. And at this point, it's at 291.30. So it's up about 2% from that pre-market low. And SPY is up a lot as well. Probably not 2%, but it is up from 400 to now 406. It is up about 1.4%. Not too bad. So let's break down what's going on right now. And obviously, guys, there's a lot that, there's a ton of variables, right? There's a ton of variables right now. But when the Fed is looking at inflation, right? Interest rates, it's also looking at jobs, right? The jobs data. And, well, it came in pretty strong, which is not good, really not good, especially if, you're in the camp of the Fed doing a 50 basis point hike and then really starting to taper off, after the December meeting heading into 2023, from 50 basis points, maybe they'll do another 50 or, then 25, right? Or whatever it ends up being, right? If you're in that camp, this, strong jobs reports, you're not going to want to see that. And obviously, I guess it's good for the jobs market, but if you're looking at it from the perspective of, the Fed and the rate hikes, it's not that good. So total non-farm payroll employment increased by 263,000 in November, and the unemployment rate, which you guys remember was 3.7, it remained unchanged at 3.7%, according to the U.S. Bureau of Labor Statistics, which this data, again, came out today. And notable jobs gains occurred in leisure and hospitality, healthcare, and government, which we'll talk more about those numbers here in a second. Employment declined in retail, trade, and in transportation and in warehousing, as the unemployment rate, again, was unchanged at 3.7%. And a little bit more about this, guys, is it's been it's been hovering between 3.5% to 3.7% pretty much since March, the unemployment rate. And the number of unemployed people was right around 6 million people in November, which was unchanged from the previous month. So the thing here, and we've talked about this a lot on the channel, guys, and you guys know this stuff, or maybe you don't. I'll tell you right now. The thing is, why the White House and a lot of people on Wall Street are not claiming this is a recession is because of the unemployment rate, right? The jobs market, labor market is still pretty strong right now. So that's their main talking point about that. And that's kind of, the last domino to fall. If the unemployment rate really starts cranking up in 2023, which I feel like it will with all these layoffs that we're seeing, that we've been seeing in big tech, and they're probably going to continue to lay off, unemployment rate's going to go up, and that's going to be the last domino to really get us into that deep recession. I'm not saying we're going to get into a depression or anything crazy. Who knows what's going to happen, but that's going to get us into a legitimate recession, even though now we're still in a textbook recession, but a lot of people are denying that, and they have been denying that for a long time. So let's talk a little bit more about these numbers. Leisure and hospitality added 88,000 jobs in November, including a gain of 62,000 in food services and drinking places. Leisure and hospitality has added an average of 82,000 jobs per month thus far this year, less than half of the average gain of 196 jobs per month in 2021, which that kind of makes sense. 2020, we had a crazy outlier year. A lot of people were rehired, in the next year, right? So that makes sense, and that's declined into this year. And employment in leisure and hospitality is below. It's still below. It's pre-pandemic February 2020 level by almost a million guys, or about 5.8%, 980,000 jobs to be exact. So that is pretty interesting there. That it's still down a bunch from pre-pandemic, guys. That's something worth realizing and worth noting. And in November, employment in healthcare rose by 45,000. Government added 42,000 jobs in November. So again, we had a pretty decent increase in leisure, government, healthcare, but a decline in retail, trade, transportation, and warehousing, which is a little bit alarming. Maybe we'll get into that in another video. But look, markets, even though, this is a strong jobs report, I guess, maybe not, I don't know, but it's better than expected. Let's put it that way. Depends what angle you're looking at it. If you're looking at it from the perspective of the Fed and raising rates, it's worse than expected. But if you're looking at it, I guess, from the job market itself, it looks pretty strong still. So even though, it's worse from the Fed's perspective, they're probably going to be a little bit more aggressive, and we'll see what happens and what comes out of this. SPY still trucking along, Triple Q still trucking along, and they have completely filled the gaps here from that they've closed that gap, right? So we'll see what happens. I mean, SPY at this point is at a big level at 408, 410, 415. That's going to be a big point of resistance. Triple Q, right around 295, 300. That's a big spot of resistance. So we'll see what happens at that point, guys. And to quickly look at some stocks now, I'm not sure if you saw, but the Chinese stocks, they're moving again. These have been on fire, and they're not stopping by the looks of it, guys. Alibaba is up another 6.5%. Massive candle here, green candle on the 4-hour. And on the intraday, we can see this thing ran up from the second the markets open. It was at 86 bucks. It ran up all the way to about 92. It cooled off, and then the bulls brought it right back past the highs from earlier today. So bulls are on fire right now in Alibaba. And on the 4-hour, going back to it, it is clearly now taking the highs out from a couple weeks ago. We're at a multi-month high. The right shoulder in this inverse head and shoulders looks like it is, trying to complete. We could have a lot more upside, maybe towards 100, maybe even past 100. So out of the Chinese stocks, Baba's looking the best, in my opinion, short-term wise. JD's looking decent. It's also up 6%, but it's not quite yet out of the highs from the middle of this month, whereas Tencent, or I think Tencent's the same, actually. Hold on. TCEHY. Tencent's wrestling with those highs from the middle of November as well, same as JD. So technically, out of those three, JD, Baba, and Tencent, in my opinion, Baba looks the best. That's just me, though. And, there could be more upside in all of these. If Tencent breaks 40 bucks, where I'll set my alert right now, this could be breaking out mid-high 40s. If JD breaks out of that 60 level that we talked about, right, this could be going mid-high 60s. So set your alerts, guys. Watch out for these. There's a lot of, momentum right now in the Chinese stocks, which could change on a dime. Keep that in mind. This could reverse on a dime. But, right now it doesn't look like it wants to do that quite yet. So those are a couple Chinese names that I'm watching. Let's see. Is AMC? Oh, look at that. GameStop. Wait a second. GameStop's now starting to move. What did I say, guys? Not anything crazy, but it's up 3.5%, and it's actually up 7% from the pre-market low, which is even bigger. And now it's actually taken the highs out from yesterday and the previous couple of days before that. So GameStop looks really, well, I don't want to say it looks really good, but it's looking like it's trying to potentially break out. We're starting to gain some momentum. Looks like volume's kicking up today. So watch out for GameStop heading into, the rest of today, guys. And AMC. AMC's up 3.4%. And you guys saw this. I made a video about this yesterday. AMC went from $7 to $9.15 in one, intraday, in less than a day of trading, 26%. It pulled back in the pre-market today, and intraday low, I think it got down, under $8, $7.90. And from that point, $7.90, we're now at $8.40. We're up 7%, and we're now actually wrestling with the highs from the pre-market, which I'll actually set my alert now. Mark is at or above $8.60. Let's do that, and we'll see where it ends up going from that point. If it breaks $8.60, we could be going back to test $9.15, which I'll set my alert there too. So yeah, those are a couple of stocks I'm watching, guys. I don't want to be in here too long. Just really wanted to cover quickly the jobs numbers and kind of some thoughts there, kind of what I'm looking at in terms of the overall stock market as well. So if you enjoyed the video, hit that like button. Make sure to subscribe. And if you want to check out my second channel, Stocks Talks Money, go check it out. Link down below or go to the search bar. It's more of a personal finance, general finance type of channel, and we're really trying to grow it on there. So, yeah, well, that didn't sound right. We're really trying to grow the channel. Go make sure to subscribe. Get your free stocks from Moo, from Weeble. All those are linked down below. Check out the Patreon as well. I'll catch you guys later. Peace out.